Hello, good evening, everyone, and thanks for coming to attend this webinar tonight. My name is Richard, and I'll be your host today. Now, if you are attending this webinar for the very first time, then please join our Telegram channel so that you can be kept posted of upcoming events such as this one. So just go to Telegram and look for Online Traders Club and join the Telegram channel. So it is a channel, it's not a group chat, so it will not be noisy. And if you're watching this on YouTube, please like and subscribe. And let me now continue. Allow me to share with you the organizer for today, which is Online Traders Club Singapore. We are a non-profit society formed in 2005, and we are a community of traders and investors here in Singapore. To me, OTCS stands for a place where we network, share, and learn, and we do it through a series of workshops, courses, and our library. Now, for workshops and webinars, we aim to have about 6 to 10 a year. It is free for our members only, but for webinars, we are making it available as free for everyone. And this was one of the physical events that we had before COVID. And we held this event in SGX Auditorium because they are one of our sponsors, and it was very well attended. For courses, we aim to have about 2 to 4 a year. And normally what we do is that we will look for good trainers and courses, and we'll do a group buy with them to get better price for our members. As for our library, we have about $6,000 worth of resources that our members can borrow physically from our library in Singapore. Right now, the library is still closed because of COVID, but if there's anything in there that you like, you can follow the instructions on our website to find out how to borrow them. And the list of items are also available on our website. So again, to me, OTCS is a place where we network, share, and learn, and we do it through a series of workshops, courses, and our library. And the normal price to join us as a member is $120 a year, but for a limited time promotion, we are having it for only $60 a year. And due to COVID, it is now entirely free, and that is still the price until further notice. So to find out more about our club, please go to onlinetradersclub.org. And if you'd like to be kept posted of upcoming webinars as well as in-person events that we are slowly resuming, please remember to join our Telegram channel, Online Traders Club, or you can subscribe to our mailing list at our website. And again, if you are watching this on YouTube, please don't forget to like, subscribe, and share the video if you like it. And here, I'd like to give a shout out to our OTCS crew. They are our friends and fellow members who are working behind the scenes. They are the unsung heroes who are helping us to run physical events, who are helping out to run physical events. And now for the very important slide, the disclaimer. You are responsible for your own profits and losses. The speaker's opinions are their own and does not represent OTCS's opinions. OTCS, its office holders, associates, and sponsors are not responsible nor liable for your losses. And OTCS events are for education purpose only and should not be construed as advice. And when you are in doubt, please seek professional help. And later on, when our speaker is sharing his slides, you can post your questions at any point in time by typing into the chat box at the bottom right of your screen. If you are using a mobile device, then you need to scroll up or down to look for this chat box. So you can type in your questions at any point in time during his sharing. And at the end of his sharing, I will ask the questions on your behalf. And without further ado, let me now invite our speaker for tonight, Mr. Jay Tune, to share with us strategies for thriving in a high interest rate environment. Jay, the stage is yours.
Hello, Richard. Thank you.
Yes, I can hear you and see you.
That's good.
Welcome back.
It's been a long time.
Yes.
Yeah, I think about 3 years have passed, right?
Yes, time flies.
Yeah, man.
And you have something very interesting for us tonight.
I hope so. I hope so. Okay, so hello everyone. Good evening, and welcome to this webinar tonight. And thank you to Richard and his committee, and also at Online Traders Club Singapore to organize this webinar. And it's great to have you back here. And it's also awesome to be back here after I think 2 or 3 years. So now let me take over the screen because tonight, right? I would like to share with you, as the title suggests, strategies for thriving in this high interest rate environment. Because as we all know, right, the interest rate right now, the federal interest rate is about 5.5%, and currently we are like thinking, where is this market going to go? Is this market reacting positively or negatively to this high interest rate? Well, we shall find all of that out tonight. Okay, so if you can hear me and if you can see my screen now, I'm going to take over the screen. Okay, so let me take over here. All right, so if you can see my screen successfully, you can hear me loud and clear. Maybe you can make use of the chat function if it's okay with you. Just help me type a hello or all good to go, in the chat, so at least I know that you are able to see everything all good and ready to go.
Yes, Jay, we see your chart.
Okay, good. No
Mm.
problem. All right, now let me get the screen to the correct window first. Okay, so where are we in the grand scheme of things, and what are some of the things that we can do to thrive in this high interest rate environment? So let us first, right, trace out what has happened in the market so far. So I'm going to make use of trading economics over here. So today, all the information that I'm sharing on screen, right, you will be able to find them online. You will be able to use navigate to this website and come to the same information, come across them and come to the same conclusion. So over here, if we have the inflation rate, the interest rate. All right. So this is the interest rate chart for the past 5 years on tradingeconomics.com. And this is the US interest rate. So why I'm referring to them, right? Because personally, I trade the US market quite a fair bit. So I have been an independent trader on in the US market for the past 12 and a half to 13 years. So my main strength of trading the US market is usually through a swing trading point of view, or swing trading time frame, where I take those trades that ranges from a couple of days to at most 2 or 3 weeks. So that is what I do during this is what I do that it gives me the consistency that I have today. So in the last 12 years or so, I have been through pretty much, I would say, different macroeconomic cycles. If you look at the past 10 years, right, there have been times where interest rate was rising, and then there are also times where interest rate was suddenly dropped, and this drop was due to COVID. And then last year we witnessed one of the steepest and the fastest growth or increment in the interest rate across board. So this has really sent the market into a tailspin, into a volatile tailspin, where I think a lot of traders that are so accustomed to the price action that was present in 2020, 2021. So just to give you an idea of what I'm looking at, in 2020, 2021, due to the zero interest rate, due to the quantitative easing, meaning printing of money, the Federal Reserve injected $3.5 trillion into the economy, into this economy, into the economic system. And therefore, all asset prices are just on the upwards rising trajectory for the 2 years. So much has changed since then. We are no longer on a low interest rate. We are no longer on a 0%, 0.25%. We are no longer in that predictable upwards trending market. So definitely the market behavior, the how prices move have changed a little bit since last year, when Omicron took over, when the Russia-Ukraine war, which is still ongoing now, and that time it was like a triple whammy, double whammy, in fact, that took the market down. And what I think a lot of retail traders didn't expect was that in reaction, in anticipation of the increase in interest rate in the second half, right, the drop was that drastic. So from a high all the way to the first half, right? The low of first half, the market dropped a total of about 24%. And this really puts a lot of retail traders at a very discomfort position, in a very uncomfortable position. And why? Because they are so used to trending market and upwards trending. However, they are not so used to volatile, sideways, or bearish market. So that's where most of the retail traders whom I spoke to, whom I know and came across, they were struggling a little bit last year. So yeah, and then this year, right, something familiar returned, which was the trend. But the trend of this year versus that of 2020, that of 2021, fundamentally there is some difference as well. So today, right, I want to zoom in on some of these factors and share with you my framework of how I, what kind of trading am I doing in this period, and what kind of adjustment, what kind of modifications did I do to my own strategy that allow me to still, have that consistency throughout the very varying market conditions. Because I would say the last 1 year was quite interesting. We have huge upside, we have huge down moves, we have huge up moves. So it was very choppy. It was, choppy to the downside. And then since the last quarter of last year, it was choppy to the sideways, where only this year through second half onwards, you start to see the familiar trend of the trend just breaking out and shooting up to the moon, in this sense lah. So as veteran traders, right, I think most of you, as told to me by Richard, most of you should be pretty veteran in this business, in this industry. You have been trading in out for at least a couple of years. I don't think this is new to you. But for those traders that have only started in like 2020, 2021, right, and there are a lot of them doing so, those traders that only started in 2020, 2021, they are in for a rude shock, because they simply do not have the skill set to navigate this kind of sideways trajectory, high volatility, range bound type of market. And what kind of strategies should they adopt, and what kind of modifications should they apply to their existing strategy? So today I'm just here to share with you my this point of view, and see is to share with you what I did, what I've done, and for you to take it into advisement, to see that, oh, okay, if this is something that you have not considered before, then good, you are able to see how you can incorporate this into your existing framework. And the whole aim right over here, right, is to give value, and also to help you through this session become smarter and more aware of what's, in this market, what is going on, and how you can take advantage of this market lah. All right, so pretty much this is what is on for tonight. And first thing first, let's look at the interest rate for 2022. So from 2022 onwards, right, you can see over here on the chart, the interest rate was kept artificially low at 0.25 ever since the COVID drop. So the COVID drop, the central bank, Federal Reserve reacted swiftly. They reacted very, very quickly by starting QE, by pumping 3.5 trillion into the economy, and also dropping interest rate at a record breaking rate, because it was at 2.5%, and suddenly we find ourselves back at 0.25% in no time, just like that. And that was also the period where, if you remember, we were all trapped at home. We had in Singapore with this thing called a circuit breaker. I think some worldwide, over the world, we have different versions of what we call a circuit breaker. We are supposed to stay home, we can't go out, the shopping malls are closed. So I think it's a pretty memorable period lah. If I can say so, because that was the period that I have not gone through in my life. So for some of you that are thinking, right, Jay, how old do you think you how old are you? Because you look very young. I'm slightly over mid-30s, slightly over mid-30s this year. So I started my trading journey at the age of 22, 22 and a half, 23 lah. So I wouldn't say that I am very experienced, but being an independent trader, and I have been so, I have not worked formally a day in my life. So I think I can accrue this to I would say I'm quite blessed lah, quite lucky to be in the right place, the right time. And also there was obviously a lot of struggles. The first few years was a lot of a lot of ups and downs, a lot of inconsistency, because I started out pretty much like, if you can remember how you started, right? I started out pretty much following the recommendations, following the advices of what other people are doing. So I will zoom into specific stocks, right, without having a framework. So literally a framework, that what I call a framework is at least a source, right, to find the stocks. And you must have some conditions that you must filter away those stocks that are not doing so good. And then finally, right, derive to a trigger. So this is like a very watered down version of the framework, but at least it is a process. When I first started, right, initially, I have an idea. So this idea can be from a report. This idea can be from hearsay. This idea, and most often, more often than not, is from friends. They will say, "Hey, go and look at this. Go and look at that." So I will have this idea, right, and I will jump immediately using this idea. I will jump immediately into the execution without thinking much about it, lah. And I mean, no prize for guessing. The results were very, very inconsistent over here. So this is where over the years, right, I have throw away those things that I think uh are not relevant. So things like technical indicators, technical studies. Personally, I started out using, still RSI, MACD, etc. So today I don't use any of that, because I find that to find a confluence in all this is what a beginner would do. And the results of a beginner usually will end up in losses rather than the trade becoming a winner, lah. So today what I do is, on the contrary, I don't use any of this so-called textbook indicators or ideologies or methodologies per se. What I do is I literally focus on a four-step model, which number one, I will look at the headwind. So to extend this framework, right, just to give you a nutshell of what I'm here to share with you, right. In my framework, the first thing I always look at is the macro headwind. This is something that I find a lot of traders don't do, because either they think that it's irrelevant, or they just totally ignore it, lah, because there's so many things to look at, right? Like, why do I want to look at macros? For me, right, the role of macro, and by on this screen, we are showing the Fed fund rate. Fed fund rate, right, is the interest rate, which is a part of the macro analysis that I use. It's one of the things that I track in the macro analysis of this overall market. And I track them, right, because they have a direct implication. The trajectory of the interest rate have a direct implication in the behavior of the market, as well as the general direction of the market. And that's why I'm tracking this macro headwind for a start. So later I'm going to break this down to share with you, besides Fed fund rate, right, what other macro factors are in play right now. And I have been tracking them since 2022, because this unprecedented increment, the pace of increment within just that short half year itself, was quite crazy. And it literally changed the whole facade and the environment of the market, which makes it very foreign, which makes it very tricky for any traders to try to trade in them, because before you can get a sustained trend, a nice trend, the prices just reverses and it erases everything. So in a sideways market like this, what can we do? This is something that you can expect to discover today as well. So after discovering all the headwinds, right, why do we do so? It's just like, on my if I were to leave my house and head towards a destination, if I leave my house for a destination, I would use Google Map to plot out the route. Not that I do not know the route. It's just that when I use Google Map, they have this additional element, right, of showing me where the traffic jam are. And if, let's say, there are some unforeseen circumstances, the traffic jam that are on the road, then what I do is that I will then choose a different route. So that's understanding the macro headwind as the first step of the framework that I use, personally, is where, right, is akin to using Google Map, where I want to know where are all the traffic jams. If, let's say, I head down this way, so there are like 3 or 4 pathway from where I am. So lucky I'm not an art teacher, my art sucks. Okay, so from where I am to where I want to be, this is my destination, right? So there wouldn't just be one way. There are many ways. There can be second way, third way, a fourth way to get to the destination. So if this is the preferred way that I usually go by, and then Google Map will show me this way because it's also the shortest. And then if happens so that when I see that on this fateful day, this path is being blocked, then what I'm going to do is that before I even set off, I would consider going by other pathways. I wouldn't go through the usual way, right, where I will get stuck, where I will get blocked. So this is where knowing what to expect ahead of us, this is where the macro analysis comes in, tells us where the headwinds are and how aggressive, how biased, what is our bias that we should be taking? Should we be like aggressively long, cautiously long, or should we just maintain like a neutral hit and run kind of time frame when it comes to our trade? Or what should we do? Should we even go short in the first place? So this is what the macros does for me in my framework. A lot of traders I find they just immediately, right, have an idea and jump into the execution without thinking much. Probably they will have some simple filter in between, like TA and things like that. They're trying to find some synergy within the technical indicator, and they just do the execution. So for me, right, the trigger is not that important. A lot of traders focus like majority of their focus, at least 50% of their focus on trigger. For me, right, my framework goes in a very, very different weightage. In that sense, my framework goes like this. The weightage goes like this. The trigger just represent for at most 20%. Okay, for at most, I wouldn't even say 20%. It's probably more like 15% of the entire um, weightage towards how consistent and how successful the strategy is. A huge part, right? At least 30% of the energy, at least 30% of the whole decision making, right, must start with the macro headwinds. That means, where are the roadblocks first? Am I supposed to even go fast in the first place? Like if you drive and then if you look at your horizon, it is all clear ahead. There is no vehicle ahead. Then at least you have the liberty of accelerating and going faster. So in this sense, right, in the macro headwind gives me about 30% of the weightage. And then finding the right stocks, all right, finding the right stocks to trade. This gives me an additional 30%. All right, this gives me an additional 30%. The filter is just like, uh, is not exactly that important. So the filter itself, right, is just about eliminating those targets that doesn't suit the timing and sticking to those that suit the correct timing and finally deriving at a trigger. So you can see over here in this whole process, right? In this whole process, or so-called the framework, it is not as easy as I get an idea, which is like a very binary 50% weightage, and then I go and execute. And that's like a 50% weightage. So usually the traders who find themselves in having results that are not consistent usually stick or uses very closely to this kind of very lean binary framework. I have an idea, I hear from somewhere, and then I will just trigger. And then what they will switch out is they will switch out the rules for execution. Switching out the rules for execution, that means jumping from one system to another, jumping from one instrument to another. Like, okay, I've seen traders going from stocks to commodities, then after that jumps to jump to options, and option don't work, jump to forex don't work. So they are just jumping around, hoping that whatever that they are using right now, hopefully it will work. But they forget to see that fundamentally, right, that's not the issue at all. The execution is not the issue at all. The changing of the rules is not a huge it's not like a big issue at all, because if they just shift their focus to make sure that the nature of the stocks that they are analyzing on is already fulfilling the criteria, then when it flows over to the trigger, it's just like a snap of finger. It's that easy. So to put it in another way, right? It's just like, if what separates I would say a average student from a ace student. What separates them? It is about the daily work that was put in. When they go for the tutorial, they are listening. When they go for the lecture, they are listening, processing, and then they remember from the learning stage. And then this learning, right, piles on step by step. And when it comes towards the examination, that's where they will be able to recall this consistent work, right? They will be able to call on this consistent work and make the examination count. Whereas, right, a trader if a trader is just counting on execution on the rules or the instrument itself, right? What happened is that it's just like the other student, the average student who doesn't study every day. After school, they just go and play. They will just not study, go on YouTube, go on TikTok, whatsoever. And then when it comes nearing to the exam, and the worst still, right? One day before the exam, okay, guess what? They try to burn the whole book and drink down, hopefully that they will memorize everything. So I think that approach is very much akin to traders who are doing this. So if you find yourself still doing this, which I understand from Richard as well, most of you, I would say I will call you my senior. You are definitely experienced. You have been exposed to a lot of methodologies, a lot of different sources of all these methodologies. So whatever I'm saying today is not new to you, but I find that it is also essential that sometimes we need to go back to drawing board to critically evaluate what is the root of the issue. The root of the issue is not changing or curing the symptoms, it is curing the issue itself. So in this case, the process, okay, in this framework versus the usual process, changing just the execution, the rules, changing the market, jumping from one system to another, jumping from one market to another, is still going to land you back into the same old inconsistency. And this is what I have realized after exchanging views, coming across, rubbing shoulders with many, many traders. I think I've at least talked to a few hundreds and few, I think possibly even over 1,000 traders in my last few years of engaging traders through the seminars and webinars. So I find that a lot of them, right, they are just changing the surface. That means you go to a doctor, they give you the medicine to cure the symptom. That's all. They don't cure what really needs to be changed inside. So today, right, I want to bring up this, go back to the drawing board together with you, and then go and look at what am I looking at that gives me a very different result from what most traders are getting. I will think that I'm competent at what I do. I'm not the best at what I do, but I do think I'm fairly competent in what I do over here lah. Okay, so over here in this framework, all right, in this framework, we are okay. Let me drink some water because I'm about to cough. Thank you. So over here in this framework, I would first consider the macro headwind. And with the macro headwind, what it does is that it gives me the bias. All right. It will then give me the bias to know that if let's say I'm driving, should I ease off the accelerator, or should I just full gas ahead? Or should I just chiong out or drive slowly or drive carefully? What should I be doing? This is what the macro headwind is telling me now. Okay. This is what the macro headwind should tell me first. With that bias, then I will zoom in. All right. Then I will zoom in, right, to what kind of trade lah. Okay, what kind of trades, what kind of sectors do have money flow, and that is one of the hallmark of what I can do that leads to my consistency over here. So the key, right, to successful trading, in my opinion, the key to successful trading is to focus on the correct stocks. So for me, right, I don't jump into stocks like Tesla, like those, what do you call them, the Zoom lah, C Limited lah. Those are very sentimental driven stocks lah. So I don't jump into any of those stocks unless the price action is really, really very strong. For me, I like to focus on those bread and butter stocks. Like for example, in 2020, everyone was looking at Zoom. Everyone was looking at Palantir. Peloton Interactive. What was I looking at? I was looking at DE. So to give you an idea what kind of stocks I was looking at, right? During COVID period, okay? So this is DE. And if I were to share this stock with most traders, they'll be like, huh? What is DE? DE is within industrial itself. But then, right, what they will do is they will look at Plantier, okay? I mean, in the same period, they will be looking at stocks like these, hoping to strike it big and make multiples. And then they will be looking at stocks like C Limited, now become a submarine. Now has since become a submarine. So it went from a very awesome run, like, in the 30s, right? Then it ran all the way to almost 10x to 360. So yeah, they will be focusing on this kind of stock. But on the contrary, right, I don't like to focus on that kind of stock lah. Personally, I like to focus on where this where the news isn't covering, number one. Number two, where the money flow is heading into first. Okay, where the money flow is heading into. So by focusing on the buyers, by settling down on knowing which stocks should I zoom into for now, this already gives me more than half of the success that I require already. And then finally, right, before the trigger, I would use TA because most of my trades are ranging anywhere from 3 days to 3 weeks lah. I don't trade longer than that. I'm not like those intraday trader as well. So from a swing trading perspective, most of my trades are within this time period. So I'm making use of TA to help me identify my trade plan, like where is my ideal entry, what is my risk to reward, and finally, right, the trigger is literally the execution. And this I would say is like maybe even 15% or lesser weightage towards the overall step process lah. Okay, so far is everything good? If it's good, I know you can just help me go to the chat and help me type good in the chat. So usually, right, my style is I like to have a conversation with my attendees. Why a conversation is because I think in this virtual background, in this virtual room, right, it's essential that we are having a conversation instead of me doing a presentation because personally I don't like to one-way present. One-way present is like very mundane, very dry, and things like that. So at least by having a by having a conversation, I would be able to know of your questions. I'll be able to know that you are on point together with me to know that where we are heading together. So is everything okay? All good? If it's good, have me type good in the chat. I will be able to see them. Don't worry. So that's why I'm looking at left to right. Yeah. So it's not that I'm distracted. It's just that on one screen, that's where our chat is. And on the other screen over here, this is where the content is. Okay, all good. Awesome. Now, over here. Okay, so having talked about this, right, let's zoom in onto the first step. Okay, the first step of this framework, which is macro headwind. So from the macro headwind point of view, what has affected the market so far? Okay, what has affected the market so far since 2022, right? If you are thinking of war, I would say I don't think so lah. Even the Hamas versus Israel right now, I don't think it's going to have a lasting impact on the market because true enough, I mean, if you look at where statistics is, looking at where there's market now, there's war ongoing and the stock market has reacted in one way lah, literally just rallying upwards lah. Okay, so war I don't think is causing any ill effect. All right, the at least the recent civil unrest, I wouldn't say the war from like Russia versus Ukraine. This is more like a civil unrest. So what is one factor that really weighs down on everyone's mind, right, is this thing called the inflation. All right, inflation. And most of the people, right, are just looking at all right, most of the people are just looking at, let me just open up one more tab over here. In countries, I think I click on, yeah, like that's easier. So most people are just looking at the headline inflation rate. What the Federal Reserve is looking at is not so much of the headline inflation rate, but more so, right, they are looking at the PCE, personal consumption expenditure price index, And this is what they are looking at most of the time. And over here, we can see that the PCE, right? The overall inflation, let me put on 5 years, we have hit a high of 9.1% last June. So 1 year, 3 months on, okay, 1 year, 3 months on, finally the inflation has hit a low of 3.2 and now bounced back a little bit at 3.7%. This is still a little far off from our long-term target that the Federal Reserve has set out to hit. So they want to hit around 2%. So the headline inflation rate is one thing. The other one, right, which I think the Federal Reserve is paying a lot more attention to, is this thing called the core PCE. So the core PCE price index is the Federal Reserve preferred gauge to measure inflation. And this still remains at a high. So I prefer to look at core PCE. Okay, I prefer to look at core PCE over the headline inflation rate to have an idea of when the Federal Reserve is going to reduce or plateau their interest rate, because these are the two biggest factors. Number one, inflation. Number two, interest rate. These are the two biggest factors that affects the market since last year, that sent the market into a volatile tailspin. So the inflation rate over here, core PCE, what is their long-term target? They are still looking at 2 to 2.5%. So as you can see, wherever it is now at slightly below 4%, we still have a way, some room to go lah. So what does this tells me about the trajectory of the interest rate? This tells me, right, that the interest rate is likely going to remain high, likely going to remain at around 5.5% right now. It's likely going to remain around 5.5% and still will stay high until the core PCE rate hits 2 to 2.5%. So when are they going to cut interest rate? I believe they will start to cut interest rate when this core PCE rate creeps down or drops down towards their long-term target area. So why is this of importance to us? Why? Why as a trader? Why is this of interest to me as a trader? Because right, when they cut interest rate will determine whether are we at the last leg of this run or not. So let me elaborate on this. So far so good. Is everything clear? Is everything okay? If it's okay, can you help me type okay in the chat, please? If it's okay with you, just let me type okay in the chat. Then at least I know we are on point and then we can move on. Good. Thank you. Thank you, Johnny. Okay. So over here, why is it important? Because if you were to look at the history of the markets, right? Looking at, I'm just going to pull up SPY and then I will throw up the Federal Reserve rate indicator. So you can see this is the Fed Fund rate indicator and I will just zoom out. All right. Just put this to weekly and I will just zoom out. So why is this important? Because if you were to look at specific areas on the chart itself, let me just put up my drawing. All right, let me just put up my drawing. You can see that in an interest rate hike cycle, usually it coincides with a upwards movement of the market. In an interest rate hike cycle, it coincides with an upwards movement. In an interest rate hike cycle, I know last year was like because this last 2 years really gone too high. So there was some shuffling that happened last year. And this year it almost rallied, almost back already. So now this is where in a rate hike cycle, we rarely get like a real bear market, and provided there is no external catalyst. So what are the big catalysts that happen in these past 2 decades? Number one, we have the dot-com. Number two, we have the subprime. These are the external catalysts that literally send the market down into like those 40 to 60% drop. And then in 2020, in our recent history, we have COVID. So all this, there are an external catalyst. All right. All this huge market drop, there are external catalysts. For now, there is nothing on the horizon yet. I'm not saying that there will never be, but so far as what I'm seeing, as far as I'm concerned, there is nothing on the horizon that signifies like a huge market drop is going to happen. All right. However, we all can also draw inference, right, from what has happened in the market previously, where you can see the market just plateau sideways. As the market plateaus sideways, think about this. What will be the knee-jerk reaction in the market? When the market plateaus sideways, okay, the initial reaction, right, will be that of volatility, number one. That's number one. Number two, right, when market goes sideways and after the dust have settled, the buyers is for a upwards run. It's an up run. It's a bullish run. Why? Why is that so? Because think about this. Interest rate sucks out your disposable income. So by understanding this, right, the higher the interest rate, your lower your disposable income. The lower your disposable income, your spending will be coming down. And as your spending comes down, the whole economy, or in this sense, right, the company profits, over here, I mean, this is a very brief relation, but more or less is there. So the company profits are also heading down. So higher the interest rate, all these are going to come down. Sorry, disposable income higher. So when you plateau the interest rate, when you are no longer increasing the interest rate, the reverse happens. Okay, so the reverse happen when you are looking with the expectation to drop interest rate. That means I'm no longer increasing rate. I'm just going sideways for now. Not bad leh. Okay, so what happens? Your disposable income goes up, your spending goes up, and the economy will get a small boost from what is happening right now. Company profits goes up, and then the price eventually have a bullish reaction. So this is like the general relationship between interest rate, the interest rate trajectory, and what happens, the correlation to the chart. So over here, right, we can see that whenever the interest rate plateaus, what are people expecting? They are already expecting the rate cut to come already. So people are always forward looking in this market. People are always forward looking in this market. And what they do is when the interest rate goes sideways, they are already expecting. Okay, they are already expecting a cut. That's what they are expecting. Interest rate going sideways, they are already expecting a cut. Therefore, right, there will be a knee-jerk reaction of an upwards movement in the market when the interest rate plateaus. So right now, we are at that juncture. We are near that juncture because with the interest rate currently at 5.5%, we can see that over here. By November, okay, you can see November, there's a 90% chance that current interest rate is 5.5%. By November, there's a 90% chance that it will stay in this way. And if I go to the first half of next year, by June, okay, you can see that majority of the consensus revolves around keeping the interest rate or cutting it by 25 basis points, because you can see over here it's 5.25. By May, it should still be around 5.5. So the general consensus on the market is that the interest rate from now, it is likely to plateau till what? It is likely to plateau until the first half of next year. So as the interest rate plateaus, where is the market likely to go? It is of my opinion and my bias that the market will still have some upside, possibly, I think very likely to exceed the high that was made in December 2021. I think we would exceed that high around close to 480 lah. All right. So this is my bias so far based on the interest rate hike cycle, based on the macro cycle. But what comes after that? All right. What comes after that is that when they cut interest rate, usually when do they need to cut interest?
Oh, Jay, I
Yeah.
lost you for a while.
Oh, really?
Yeah. Just now for about 20 seconds. Okay, your screen
Oh,
is back.
okay.
Okay, and you're back. So just now you were talking about your bias is to the upside.
Oh, okay. There. Okay.
Okay,
No
yes.
wonder there's a ting sound. I'm like, oh,
Yeah,
okay.
I also wonder what happened. Okay, thanks. You're
All
back.
right. Thank you. All right. So pardon that. Please pardon me, everyone. Okay, so what I was saying about that, thank you, Richard, is that my bias is still to the upside because I'm expecting the interest rate to hit sideways from now to at least the first half of 2024. But having said this, it also sends us right into this thing called the end game lah. So personally, I'm looking at the this is not Avengers, but I'm looking at the end game for the market. I do not see where the catalyst is coming from yet, leading to the market coming down 40-50%. I don't see it yet. But for now, what I'm seeing, and I know that we are in the end game stage where if once they cut the interest rate, that's where why would they need to cut interest rate? Because obviously some the conditions wouldn't be good. That's why they want to cut the interest rate. Just like what they did during COVID, what they did during subprime, what they did during dot-com bubble. So over here, if they do send the economy into a recession, which is highly anticipated, but the Federal Reserve, Jerome Powell, he refuted any of that. He said that no, we are in here likely to be in a soft landing rather than a hard landing. So I hope he is true. I hope whatever he says comes true. So if that would be the best case scenario. If not, from now to where they cut the interest rate is I will still uphold this bullish bias. So is everything clear? If it's clear, have me type clear in the chat. If it's okay, type okay in the chat. I will be able to see them. Don't worry. Thank you. Okay, good. So with this in mind, right? With this in mind, with the first step of the framework, which is your macro, of the way. The second step, right, will be to look at what? Will be to look at where do I find those stocks? Because finding the stocks, right, your results are just, it's my belief lah, that your results are just as good as the stocks that you can find. So how do I find the stocks that are so-called the sectors that are rotating in? And this rotation change very, very frequently. I make use of a website, right, that is very straightforward over here. Just give me 1 minute. Let me just pull it up over here. So I make use of the stockcharts.com. And on the stockcharts.com, right, here, this is where I want to find the stocks. All right. This is where I want to find at least the sectors that are going. What I want to see, right, is that based on the benchmark versus the benchmark, and this is something I encourage you to do, because I want to know, right, which are the sectors that are outperforming the overall benchmark, which is the S&P 500. So using this as a benchmark, then I want to look from a visual point of view. So I'm just using something visual. From a visual point of view, where you will get, you can see that the market is just pushing upwards. So which are the sectors that are outperforming this run? I think it's easier to filter out first. So like staples, obviously, is still weak. Energy, due to the falling oil prices, it is still weak lately. I think utilities is still under their, their moving average. I would personally filter that out. I think that healthcare have some potential. So this is what I like to look at. Most of us, right, will just literally zoom into XLC and XLK, which are technology, to say, wow, they are good. I agree. They are like the top tier candidates. All right. These are like the top tier candidates. Some of the constituent stocks within there are like top tier candidate. Apart from this, right, industrial is like staging a return as well. That's something that I am personally preferring to look at. So industrials, healthcare, this is what I would like to look at. Materials, not so much. I'm not so interested in that. Financial, still a little weak. Heading into the end of year where the time cycle is also not very favorable to financials. I'm not looking at that as well. So discretionary is like a okay lor, like a yes, no, a bit neutral lah, kind of sector lah. So with these, right, immediately what I do is what you can do here is immediately you are able to filter away those sectors that are like, not doing anything, not going anywhere, right or not? They are not They are totally just rotating out. There's no money flow in them. Staples, I'm just getting rid of them. Energy, I'm getting rid of them. The financials, I don't see the strength yet. All right, I don't see the strength there yet. Industrial, yes, I do think they are staging a comeback. And then healthcare, they are also staging a comeback. So how do I now put them into the framework? All right, now how do I put them into the framework? Now, knowing number one, where the macro headwind is heading into. Knowing where this macro headwind is heading into, I know that my bias, it is bullish. All right, my bias is bullish until when? Until they start to cut the interest rate. So this is just like if you're playing musical chairs, right? This is like having an advantage of knowing when the music is stopping. So the thing about musical chair is that you don't know when the controller of the music, right? You don't know when are they going to stop, ma. So then everyone will be doing a last minute mad scramble for the available chair. So once you have this, it's akin to I roughly know the signs that you are going to exhibit before you stop the music. And just by having this small advantage, right? What does it give you? It gives you an edge, right? To, act slightly earlier and to anticipate what kind of actions that is going to come so that you do not, number one, trade too aggressively. Number two, you are able to pair your aggressiveness or your sentiment towards the market together with the position sizing that you are taking. So this is where number one, the macro headwind, what I'm looking at is the interest rate. When are they going to cut it? And that will give me the bias and the rough time duration. So this is akin to knowing when the music is going to stop. So right now, I think we are in like the last verse lah. Okay, the end game towards that huge push down, the huge there is no catalyst yet, not any that I see right now, but eventually the market will find something. All right, eventually something will surface, which recession. It is like the pink elephant in the room where everyone is looking at it, thinking and half knowing that it will be here, but yet everyone is denying the existence of recession. So if you look at news, right, there are still no news of major recession and ongoing. It seems to be like artificially coming down the overall market lah. So I think this will be the trigger, but we are not that affected yet. So that's the first step on the framework. Second step on the framework, it helps me to zoom in to find, right, where is the money, to find my money. So I know that my money or the market's money is flowing into areas of interest to me right now is healthcare and then industrials. Most of the people would be looking, most of the people would be looking at the first tier, which is technology and communications. So communications, services, as well as technology. Yes, I agree, but those are the leaders. Subsequently, I think the first tier, after the first tier have moved, the second tier should be the healthcare and industrial. So how I derive to this is using like a top-down bird's eye view of the market. So once I do that, and once you do this, you know that you are filtering out 7 out of the 11 sectors. Your focus immediately just goes down to communication services as well as healthcare plus industrial. These alone would have saved you a lot of heartaches, because if you were to apply the correct rules, the right setup to the wrong, let's say you apply it to staples, you apply it to a sector where things are just going down, and you expect the prices to just turn. I, I don't think the market works like this. So that is the second step. The third step, right? Okay, the third step on this framework, it is to go through a filter. All right, it's to go through a filter. So what I do here, right, is the filter, I'm going to exhibit to you using the market first, because most of the stocks, right, 85 to 90% of the stocks behavior and direction would correlate with the market. So it pays to know how much more are we going to go on the market to know that, oh, which is the eventual resistance that I'm looking at the market, that's where likely the market will turn, and that's where the stock will start to rotate again. You don't want to get in when the market is already at a resistance. Okay, so now let us head on over to the filter. So over the filter, right, I'm just personally, I like to look at S&P 500 futures. Why I like to look at futures is because a large part of my analysis involves volume as well. And as futures go, it is a centrally traded product. Therefore, I look at volumes, and the volume can be more accurate lah, in that sense lah. It's not like a proxy lah, because if I were to use CFD, then it will be a proxy volume rather than the actual volume that is at the exchange. All right. So what do I see on the market so far? Currently on the market, just last week, right, I was sharing with my community that I was looking at the very low market breadth. All right, let me just put on the be adjusted. At that point of time, right, I was looking at very low market breadth. The market breadth was already all beaten down to quite a beaten down state already lah. Well, what I mean by this, right, is okay, so what I mean by this is that if I look at the percentage of stocks that are above their 50 days moving average, all right, the percentage of stocks, and I'm referring to all stocks that are above their 50-day moving average. Obviously, as percentage go, the top will be 100%, the bottom will be 0%. So there has never been an instance whereby it's a full 100% or a total, 0%. So 0% means that all the stocks are bullish. All the stocks are bearish, which is very rare, because even in times like COVID, you have a stock like you have stocks like Zoom, Amazon that flies, and yeah, so on and so forth. Like you will never have 100, you will never have the 0. So most of the time, I'm just looking at around 75% and 20%. And just last week, right? Just last week, where the market was over here, just last week on a Tuesday and a Wednesday, I was looking at a market breadth of around 15 or 13 point something. Okay, this percentage of stocks above 50 days moving average is something I track quite frequently. I track it quite often. It was around 13 point something percent. I can't remember the decimal place last week. So what happened, right, was that I know that when it is only 13% of the stocks that are above the 50 days moving average, 87% of their stocks are below their 50 days moving average. What does that tell me? This tells me that the majority of the stock at this juncture are already beaten down. So if I still want to short there, doesn't make sense, right? So therefore, right, at that point of time, incorporating technicals, what I did, right, was that I already have a bullish bias. Like, okay, I'm expecting a bounce to come already. So the next thing I'm waiting for is just the price action to exhibit that bounce. That means before you even bounce, you're still dropping. I'm anticipating, I think might bounce already lah. Okay, I think might bounce. So what I was waiting for over there, and this is the third step of that framework that I use, which is the filter, a TA filter. So in this TA filter, I'm looking at number one, the breadth is low. Number two, I want to know the market, which price level is likely going to bounce at. So in this case, right, you can see previously throughout 2022, a resistance area is somewhere around 4280. All right, a resistance area is somewhere around there. 4280, 4280, 4280 until this year in June, right, that it literally broke above this area. So as it broke above and then it hit a high in August, and after August the market just seems to tank downwards already, and finally when it came down to test this level again, I was in fact very happy. Why? Because this tells me that previously what was thought to be an expensive price for the market to swallow, to accept, now it seems like it is holding, and this holding tells me that previously, with that example, with all the conditions and all the facts, the factors that are at play, this price level was deemed to be expensive. That's why nobody was keen enough to buy, enthusiastic enough to buy above it. All right, not sustainable lah. But now, as the prices comes down, it seems that people are absorbing the price, okay, buying up at this level, which in this case is still at around the same zone. So this expensive, right? I loosely translate it to what used to be expensive is now kind of cheap lah. So it has fulfilled that criteria that I was looking at in this filter. And after going through the first step, I know that, hey, we are in the end game. The second step, I know that, okay, I want to zoom in. The top two is the top two is communications and technology. The second two are in industrial as well as healthcare. Then I want to know, hey, is the market together with me or not? If the market is together with me, then the chances of the stock literally turning and going, and that's where I will have a greater chance of success lah. So as you can see over here, right, this framework that I've done so far, has it involved anything coming to trading? The answer is no, not yet, because this is the preparation work, the 9 steps of preparation before that 1 step of execution, and usually these are done behind the scene. So most people are very fascinated or with the trigger, right? Thinking that the trigger is everything. To me, the trigger is just like a natural process step where you have already done all this, knowing that I know where the money flow is, I know where the how long this road still has to go, and I think that the market is in line with me. Then with all this condition check, right? Wouldn't that naturally give you some consistency already? How many of you agree? Can you type agree in the chat if you do? So if you do, can you just help me type agree in the chat itself? So this is where you see, this is what I do lor. I don't really just see stock jump into stock, see stock trade stock, see stock trade stock. For me is I consider all these things first before I jump into the stock lah. So over here, what is the next area that I'm looking at for S&P 500? For now, right, I do think that the S&P 500 now it just broke above the pivot level. It has done a very nice reversal. Okay, it's done a very nice reversal, coinciding with the key level over here, coinciding with a low market breadth as well. I do think that there is some legs to go on this run. Not far, but until around 4480. Nothing above 4480. So this is what I'm looking at so far. I wouldn't be surprised if the market does do a 1 day, 2 day retest on above the pivot, and then it hits towards where it's going to be. So these, right, just by this analysis itself, I know that, okay, the long run, I know where is the general bias. Then in the shorter term, I know that I'm going to long the market and remain long until it hits around 4480 area lah. And this is what gives me that confidence to say, okay, now on my stocks, I'm going to find the trigger and I'm going to take it. And then with all this foundation work already done and laid out, this is what, you know, the results, the consistency is like a natural byproduct already. So this is just like a student that has been listening, paying attention in class, and subsequently when he goes to the exam, he's like, okay lah, no stress lah, just go for it lah. Why? Because everything is already in here. What? He's already focused, he's already listened, he's already paid attention, done his homework, and that's this is what trading is supposed to be. It should not be like a last minute. Oh, how I jump into this. Oh, okay, I just jump in here. It's just like this is akin to a student just before the exam, 1 day before, then try to study. Then we all know how is that going to turn out lah, right? Okay, so speaking from experience lah. Okay, so this is what I think where the market is. I do have a bullish bias. So what you can see over here, right? Let me just summarize everything concisely up for you. So you can see here, the first step in the framework, which I shared with you tonight, or this is the step of processes lah. All right, the process slash framework. The first step, it is to know where is the macros. The macros gives us the headwind. Number two, it is to then know where is the money. I have to find the money. And this allows us to zoom in. those that are really like not so good one, like staples, not so good one, filter them away already. So once you filter them away, your chances of success is so much higher already. Then step 3, you just have to make sure that the filter or the timing, in this sense, right? The timing of the overall terrain, the terrain is friendly, the market is friendly. The filter, the market, or the TA market is in line with what we are looking at. So this gives a long-term view, mid to long-term view, whereas the market, when it's in line, like what I've just did here, I think that the market has a likelihood of heading up to 4480 to 4500 thereabouts. Okay, at least in this run, before the next pullback happens, at least in this run. So this gives me the short-term bias. And by checking these 3 boxes, right, what I have just done is to, number 1, no, I'm not going to short it. Number 2, I'm not going to long some sectors. Some sectors like staples, I'm just literally going to put them one side. I will focus on my communication services. I'll focus on technology. I will focus on industrial. I'll focus on healthcare. That is what I will focus on. Then I want to know that, okay, in the short run, does the market still has that boost lah, that to go up slightly higher? In that sense, yes, there is. So with all this done, right, it's like the checklist. Okay, before I fly, this is where the checklist is lah. So naturally, then it will lead you to the 4th step, which is the trigger itself. And this trigger, right, it can be any trigger that you are using. Of course, I do have my set of triggers, which I also hope to share with you tonight. I do have my set of trigger, but you must see that whatever that I've done here, okay, whatever that I've done here is to really lay down the process to make sure everything flows before I even take the trade. So this is like the 90% of the work done behind the scenes, and the 10% is where people usually see lah. Okay, so far, does this process add value to existing your existing practices? Yes or no? If it's a yes, can you help me type yes in the chat? So far, is everything clear and concise? Yeah. So if it's good, just help me type good in the chat as well. Good. Thank you. So, Marcus, can I check that the macro will change time by time? From time to time, yes, the macro factors do change. All these factors, in fact, do change. The industry rotation do change. The sector rotation do change. But the process, this process, right, it is not, it is an evergreen process, if you can see. So this framework that I shared with you is an evergreen process that you are able to use. And of course, if you must go and deduce at that point of time what does the factor tells you lah. So you can't just take it, oh, now then confirm this macro is confirmed like that one. I mean, it will change until it changes law. So simple as that lah. But the process over here, this is evergreen. Okay? Okay, all good. So over here, right, with this process and with this time, right, I also hope to share with you my trigger. So with the permission of Richard and as well as in conjunction together with Online Traders Club Singapore, I have Richard's permission to share this trigger together with all of you. So what is this trigger about? For me, right, my focus lah, okay, with this kind of headwind, with this kind of market, with this kind of market terrain, right, what I like to do, it is to trade within the market movement. So what do I mean by this? As you can see, right, some of the most traders, what they want is this lah. Oh, I want to buy here, and then I expect to long term hold until here, then they sell. So they will literally buy at the bottom and then sell at the top there. Ta-da! I mean, we are all experienced enough to know that this rarely happens lah. Why? Because number 1, when the market is doing this, you dare to buy where the cursor is. Where my cursor is at 3,800, you dare to buy. It's like a downtrend, right? You dare to buy. So chances are people also don't dare to buy. But of course, in hindsight, it looks like, wow, then I know that one's a low one. So what I like to do, right, is that I don't like to use this kind of very impractical, buy low, sell high, show you in hindsight kind of thing. To me, is all these are just rubbish. It doesn't work. So what I like to do instead is to objectively evaluate in the event that you really dare to buy here, and then you see the market go up, and then start to come down like that, wouldn't you doubt yourself? Wouldn't you doubt yourself a little bit when the market just show such strong movement of dropping and then drop further? Wouldn't you doubt yourself having come off that, a huge downtrend? So the fact is, the idea of buying here, buying low at 3,800, and then hoping that you will go all the way until 4,600, that is nothing but a dream, like a fallacy. So what I prefer to do is to take trades, right, that are within the trend leg itself. So as you can see over here, what do I mean by one trend leg? One trend leg here, we can see that this is about 28 days, 19 bars. So this is about 1 month. Then another trend leg over here, this to here, it's about 35 bars, 50 days. This is about 1.5 months. So this is what I prefer to do, to take my trades short enough so that I can fit into the trend and still catch the explosive movements within each of the trend leg, whether is it to the upside or whether is it to the downside. Because no way I'm going to take this kind of trade where I think everyone is hoping for this. Oh, I can buy low and then sell high, like right there, and then you hold it for like 200 bars. 200 bars is almost 1 year already. All right, this is about nine months. Nobody in the right frame of mind will do this, right? So that's not what I prefer to do lah. So I like to apply in between, so that even the market is showing its volatility, which it is slated to do until where the market overall direction changes, I prefer to trade in between that few days lah. Okay. So if sometimes you find a good trend, then the trend will lead to probably a couple of weeks at most. So that is the kind of trade that I like. So today, right, please give me your permission to share with you the trigger that I have been using that helps me achieve this consistency within this trend leg itself. Is that okay? Can I have your permission to do so? If I have your permission, can you help me type okay in the chat, please? All right, thank you. Now, thank you. So what is this? What is this trigger that I'm using? Okay, this trigger that I'm using, right, is in conjunction together with Online Traders Club Singapore and Richard. So this is where I say, okay, let me prepare something for your members, which is why the special offer is here for today. So this trigger, right, is what I call the Art of Explosive Profits methodology, also known as the AEP methodology. So in short, this is called the AEP strategy. So this AEP strategy allows me to capture the few days to at most 2-3 weeks kind of trend, and it helps to address, right, it helps you to solve these few big problems. Many times, right, when you see a stock literally just going ballistic, literally going up already, what are you going to do? Are you going to like buy there? Where are you going to buy? Wherever you buy doesn't seem like the right price to buy, right? Because if the prices are going up and then you do the higher of the prices, hoping that they will do a breakout, and more often than not, when you buy the high of the high, guess what? When you buy the high of the high, the prices starts to retrace, and that's where it sets in all the self-doubt. The yeah, what should I do? Oh my god, jialat. So over here, right, in this AEP framework or this AEP methodology, I will share with you how you are able to get into this that kind of strong trend. I wouldn't say sky high trend, but how do you determine the strong trend? Those that are really, really strong, like for example, on XLC right now, on XLK right now, how can you get in onto these stocks safely? Because you do not just want to randomly buy it now. I think that is a very reckless and dangerous thing to do. And as all experienced and exposed traders, right, we all know that breakout, with the exception of 2020 and 2021, breakout don't really work, ma. Every time breakout and fail one, ma. So that's the main pet peeve about those new traders coming in and trying to catch the breakout. So number two, right, I also don't want, I also do not want you, right, to be, oh, I'm looking at a 6 months trend, 9 months trend. Well, that kind of position trading, right, will work if, let's say, the market is very cooperative, like that of a very strong trend during 2021, 2020, when the market is just literally trending upwards quite fiercely, thanks to QE, thanks to the macro headwinds. The exposure, as long as possible, I think that is good. But in these 2 years, especially last year and this year, when the market is more volatile, when the trend, as you can see, you have huge ups, huge down, huge up, huge down. What are we going to do? For me, I want to fit my exposure and my duration within that 3 days to 3 weeks kind of exposure, because any longer I would have to unnecessarily expose myself to go up and down together with them. But any shorter, we wouldn't get enough meat lah. The movement wouldn't be enough lah. So this is where, right, using the AEP framework, we will be able to avoid the false breakouts. As we all know, breakout tends to fail most of the time. And then to make use of the TA element that I'm sharing within this framework to tell where are the turning points itself. So literally, this is what the AEP framework is about. All right. So over here, what the AEP program is about, right, is that it provides you with a discretionary rule-based approach. That means I will share with you the rules, but you will need to execute it yourself. The execution, it has to be done by you. This is not like an algorithm. This is not like a bot whereby it trades on your behalf. The execution will have to be done by you, but the rules, I will provide you with those rules. So you will very clearly know where is the entry, very clearly know where is the exit, and of course, what is the size and what is your target that you are aiming for. Basically, the few elements of the essential elements of a trading plan. So the aim, right, as the name suggests, the art of explosive profits, it is to catch explosive trends. Meaning, on a chart, this is what I would want to see. All right, on a chart, one of the trades that we have taken recently. All right, one of the trades that we have taken recently is ANF, Abercrombie and Fitch. All right, this is one of the latest stocks that we have traded. So you can see, right, this is that kind of stocks that I am aiming. And what I mean by explosive trend, right, is that I don't expect to hold here and buy and hold from there to now. That's not what I meant. What I meant, or what I want, is that I want to catch explosive trend like this for a couple of days. Explosive trends like this, explosive trends like this. So Abercrombie and Fitch, I do have an open position going on, of which later tonight when the market open, I will start to lean out the position and take defensive action from there. All right. So this is the whole aim of what AEP is supposed to do. And this is best suited to the market of these 2 years, because as you can see, the market these 2 years, you have down market, you have huge down, huge up, huge down, and then it goes choppy sideways. And this is one robust way, right, that you are able to fit your trading duration to within the trend leg itself, so that you are still able to catch those explosive moves and not get affected by all the choppiness lah. So basically, this framework is designed in such a way lah. So it also, right, you can also apply them to stocks of any country, but for me, I'm applying it exclusively to the US market, because the US market is one that is, I would say, more predictable, and is very dynamic, is strong in that sense. The money flow is there, they are the leader. So therefore, I'm applying it to the US stock market instead of all over the world. But do I have students that apply this to Hong Kong market, to Singapore market, Malaysia market? Yes. But the US market does give them the highest number of opportunities. All right. So this AEP program, right, it's 100% online e-course. All right. It is not like a physical program. It is once you enroll, you will get access to the program automatically. Okay, you will get access, and you will have access to it, right, only own time, own target. So OT, your own time, own target lah. You can take your time to learn it, and you will have access to it for lifetime, for as long as I'm running this lah. I mean, so you have access to it for lifetime. And good thing I'm young, so I will live a long time. My lifetime lah. Okay, so 24/7 meaning you know sometimes you are busy in the day, then you can learn this at your own free time, after work, during the weekends, and there is no fixed schedule that, oh, I must attend during this day and all that. So this is to give you ultimate convenience from there lah. And it provides you, right, with this robust way, right, of capturing the strong moves in the market. So the key here is to catch explosive move. I do not, let me reiterate, I do not want to get stuck in the market for months. What I like to do is, if the job can be done in days, then let it be done in days lah. I don't have to drag on to like months lah. I think that's quite painful. You can go both long and short using the AEP framework itself. Because in the program, right, what I do share lah. So this is the portal that you will gain access to immediately after your enrollment. You will be able to see, right, we do have, let me just refresh it. Let me just log in one more time. Okay, so over here, you will be able to see that besides going long, right? Besides you going long for the strategy, we are also able to go short as well. So this is where I literally go through the lessons and share with you, okay, under the long setup, what are the rules? Under the short setup, what are the rules? So this is where you can see we can cover both sides of the market itself. So for the syllabus, right, I think I share with you over here. I think this is easier. For the syllabus, regardless whether you are a experienced trader or a new trader, what you will be able to pick up from here is number one, the AEP trading framework, and then in the manner that I exhibit to you just now. Remember just now I mentioned, in any trading consistent, in any consistent framework that you want to have, number one is the macro. Number two, you have to know where to find the stocks. Number three, then you will have to filter to know whether the timing is correct, the price is correct. And number four, then go by your trigger. So this is where, right, the different elements of this framework is infused into the program, different aspects of this program, where you are able to find the stocks, how to build up your evergreen A list, your A team of stocks, and then how do you do proper filtering, okay, using TA. So this is where lesson 5 all the way to lesson 9 will share with you just that. And then the trigger, where are the trigger? Lesson 10 all the way to lesson 12. Lesson 13. That's where the trigger is. So in the aspect, right, this is like 1, okay, the framework, this is 1, this is 2, this is 3, and this is 4. So as you can see, right, it is a holistic way of approaching, and I'm using US market as the teaching example over here because number one, they are the easiest to trade, they are the most trendy, if any. So I'm using the US market and focusing on the US market. So over here, what we do, right, what we are going to do together is that you will get exposed to the US market and then see how I do my TA. Number two, how are you going to make use of the trigger to take advantage of those strong stocks that have already been filtered out, all right, that have already been selected. So this is what you will discover during the program itself. And as part of the community, right, what you will receive, okay, what you will get is this. You will be added lifetime access. You will be added to a graduates only Facebook group whereby you are able to get the weekly trade ideas every week. My coaches and I, we will post out the list lah. So this is the Facebook group that you will be added to, and then you can see every week. This is the list for this week, 9 to 13. So today is the 12th, right? So because it's a Thursday, so this is for this week itself. Every single week during the weekend. So you see that we posted 4 days ago. During the weekend is where we will post out the stocks. And for this week, right, AEP, you can see we have Abercrombie and Fitch as well as INTC, Intel. So this is where the continuous support comes about. And what it does for you, right, is that you are able to engage, you are able to ask questions. So if you have any questions, if you have obviously the weekly trade idea, this is what I call the highlight, because later I'll show you what happened to the trades for the past year. I think I'm quite proud of what I've done for the past year. So later I'll just share with you a little bit on that. You can ask me questions. You are also able to get access to this is 4 times a year. Okay, 4 times a year. Every quarter you will get one. Now it's no longer on Facebook Live, but what I do is on Zoom. So you'll be notified via email as well as the part of the Facebook group. Community Telegram channel, this is where I would say everything is like a subset of this Facebook group. So the Facebook group is literally where you will be hosted in, where you can have your questions, your resources, and the weekly trade ideas, which is the highlight of this program. Because besides sharing with you how to fish, okay, this is where I share with you how to fish. Some of you also want extra fishes, or to be, in a sense, spoon feed lah, because it saves you time, right? So since I'm doing the research process, then might as well I share with you the weekly trade ideas and post it to the Facebook group, as what you have seen here every weekend before even the trade, before even the week happens. That's where I will send it out to you lah. Okay, so notable AEP trades, right? What is the kind of AEP trades that you are looking at? Well, like I said, I'm catching this kind of explosive movements lah. So this is where you can see in the past quarter, we have Rovian Sciences. I'm catching this kind of strong movement for just a couple of sessions. So like I said, the trades, right? I'm not looking to buy here and hold all the way. That kind. This is not the whole. This is not the idea of AEP. The whole AEP idea is that I want to capture this kind of strong stock. I want to capture this kind of strong movement. That's what I want to do. So this is part of that weekly list, right? Rovian Sciences is part of the weekly list that we have sent out. Even Owen Corning. This is a very nice, predictable, trending stock that we hold slightly longer because it's so strong, because it's so trending, right? So we hold, and what we do is within the program, I will also share with you how do you do trade management to take defensive action as your profit grows. The trade management portion is also covered within the program itself. So these are some of the notable trades that have happened in the past quarter. W Inc. as well, and and Cummings. So Cummings, as you can see, we want to have this kind of explosive movement. So this is where do we have any losses? Well, if you're looking at losses, right? Yes, we do have as well. Some of the winning ones obviously is easy to show. I rather show you the losses. There are also sometimes, right, whereby a stock, right, the trend doesn't continue, and then instead of going the direction that we want, we also hit our stop loss lah. So this is one of the example, Rapidly Global, where it unfortunately didn't go the way we want to, and this have to hit our full stop loss. So over here, right, I've also done some transparent logging of the results because I know that showing you a few examples, a few trades here and there is not going to cut it, because for me, that's not something that I want as well. So this is what I have done. Okay, this is what we do to show transparency to all my students. This is where, right, every single week, every single week, I think this is where 9 to 13 of October, right, you can see AEP, we have ANF and INTC. Under the latest, you had ANF and INTC. So these two are still open. These two are open trades for now. Okay, so ANF and INTC. Then if you go down to the previous week, so this was the previous week, you have BTU and FERG. So BTU, FERG, these are still open. Then if we go back further in time, this is 25th September, AIG and APO. AIG and APO. APO, there wasn't any trade. Based on the framework, AIG, we had a trade, and then it's just a loss. Okay, so this is where we track the data, we track the results, the turnout of the selection that we have posted week in, week out since last year. And why we do this is so that I want to remain transparent and above board. And I know that a lot of you are very exposed to what's going on in these communities by just showing one or two snapshots. To me, I find that it's doing you a disservice. So I rather just be very, very upfront with all of you. This is where, since last year, 3rd October, which is the last quarter onwards, 2022 October onwards, I begin logging down all the stocks that have been posted to the Facebook group every week. And every week we will have two selections. Usually we have two selections. Those that fulfill the AEP rules. So these are all executed only exactly strictly using the AEP rules. So the entry, the exit, the target, the trade management is all covered exactly as per what is inside the AEP program itself. You can see that from last year, how did the market behave in October? Well, let's take a look. From October all the way until January 2023, right? This market is trending a little bit, but it's also a little bit choppy. It can go up and it can come down quite a fair bit. It can go up and it can come down quite a fair bit. So it's kind of like a choppy market. I wouldn't say there's an easy market. An easy market is something like this, where it literally just trend very predictably on. This is where I'll say 2020, 2021 is easy. But 2022, looking at October period, if you look at October to the last 3 months, October, November, December for last year, it is not exactly an easy market to trade because it is choppy. But what has happened? Well, from here you can see out of the trades that we have taken, we have quite a number of wins lah, honestly. So as you can see, how many losses we have? We count 1, 2, 3, 4, 5, and five losses. 5 losses of all the trades that we have taken for October, November, December, which if you look at the chart itself is not exactly easy to trade as well. It's kind of choppy. So that was for last quarter of last year. So starting of this year, right, I refreshed the statistics. You can see 2023 year-to-date statistics. From January onwards, every of the AEP counter, we begin to log it down and then we execute strictly using the AEP rules. For me, what I do here, I'm using fractional shares lah, so I can hit the exact position sizing. The trade here, those that fulfill the rules those that I will have a yes over here. Those that you see like Charles Swap, all this, how come is no? No means it doesn't fulfill the rules. All right, the trend didn't continue. The trend just terminated. So of those that 2023 year to date, you can see the selection. Total selection, we have 89, meaning from starting of the year till now. Okay, starting of the year till where it is now, we have 89 selection. Of the 89, right, only 61 of them have a trade. Only 61. So the other 20 plus of them like swap lah, OGN lah, all these got no trade lah. All right. So of those that we have taken, of those that we have traded, the winning trade inclusive of those that are open right now. All right, the winning trades inclusive those that are open. So just to give you an idea, BTU, FERG, ANF, and INTC. All right. So let me just place it to one side. Let me show you this. BTU over here. So this is the kind of explosive movement that we are looking at. Then after that, we have FERG, explosive movement. As you can see, the pattern is there. All right. ANF, this is a huge one. I love this. I'm still in the trade. And this one, not exactly explosive, but still good enough, still inching upwards. So these are the kind of trades that is happening right now. It's still open. So over here, we can see that inclusive of open trades, the win trades are 47, losing trade is 14. And I'm sure all of you know that win-loss percentage is just one facade lah of the overall what do you call that? The overall success lah. Okay, it's just one facade only, just one side of the overall success. Because you can have a 70% win rate, but if your overall losses, your average losses is huge, then your expectancy will still be negative. At the end of the day, what we want to count on is this thing called the expectancy. Do you all agree? If you agree, can you type agree in the chat? If you agree. So what do I mean by expectancy? Expectancy is factoring in not just the win-loss ratio, but also every time I win, what is my average win percentage? Every time I lose, what is my average loss percentage? So you can see over here, I obviously don't have like a 2:1 win-loss ratio. What I do have is like 1:1.5 risk to reward most of the time. Why? Because average loss is smaller than average win. Average win is roughly around 6%. Average loss is around 4%. The overall expectancy, which means that overall, every trade you can be expected to make about 5% return on that one trade. Okay. So that is the overall expectancy for one whole year. Okay, one whole year, or rather year to date lah. So now we are in October, right? So to have this kind of records, and why am I doing this? I'm doing this because, like yourself, I'm also skeptical. There are so many information and misinformation on the online sphere now. So for me, I don't want to share with you a very what do you call that? A very embellished side of things, which I think you guys have been through to a lot of all this already. So today, I want to cut out all the bullshit and jump straight into this to share with you. These are the exact traits that we have taken. These are the exact traits that we do send out week in, week out on the weekend. We sent out this list. And if you follow even just the list, you don't do anything else. You just follow the list, but apply the rules lah. Don't anyhow buy lah. Okay. So you anyhow buy, then no use lah. You apply the same rules. This is roughly what has happened for my students and myself lah. But of course, future results doesn't past performance doesn't equate to future results, but in periods whereby the market is tough. So for example, lately when the market is dropping, has been dropping, so from August onwards, you can see market drop tank quite a lot, right? About close to 9%. So how has the AEP strategy fared so far from August? As you can see, of course, when the market tanked, we still have more winners. You can see this is over here. From 4th August is over here. This is like the first one, TRGP. We have a one winner, 2, 3, 4, 5. Okay, and then now we have 4 more. So there is 9 versus 4 losses. So in this period, 9 wins, 4 losses, where and when the market is coming down like that. So why I want to highlight this to you is because that I know of some strategies that are just outstanding during where the market looks like this lah. Okay, yeah, just some strategies work brilliantly like that one. A lot of breakout strategy work brilliantly like that one. But to have an evergreen or not evergreen, but a robust strategy that survives through a choppy period like this, even go through the first few months, right? January, February, March, April, it's kind of sideways, right? Look at what happened during the first quarter. So first quarter, January, you can see the losses are far few in between if you follow the rules exactly So if you look at March, okay, March over here, this was the period that I was narrating to Richard, right? I was sharing with him. I told him, hey bro, this period, I also a bit scared. Why? Because back to back, everyone also hit. I also scared, and it's like, this one cannot be right. But really, the market is like that. Until I also a bit, can meh? And then after that, see yes, I must jinx it Then in April come 2 losses I'm like, okay back to back 2 losses It's okay. It's bo pian After this streak of winning run, then you got 2, then like that lor. Then after that came another streak. I was like, wow, what's wrong? What's going on this year, man? So this year is not too bad and I am doing a very transparent review of all of these are the exact stocks that I assure you, if you go into my my students group, right, you go and look at every post. You literally go and scroll back, go and look at every single post under the AEP strategy. You will find them in here. So I don't just, this one it's not for me to come out of thin air one. So yesterday, Richard was also asking, you sure if I go into the group, I look at your posting, I will be able to find it here. I say, yeah, you don't find it here, you can't find me. I shave botak, show you. So it's really as it is lah. And the reason why I want to do so is because I know a lot of us are already exposed to a lot of all this half truth, misinformation. That I don't just want to show you the good side. I also want you to share to show you that this is the track record as it is. The facts are the facts lah. I can't change it. There are wins and there are losses, and there are some losses that are painful a little bit, like MSCI 6%. That's painful. AYX 6%. That's painful. But also we do have nice wins like LNTH, which is 18%, because we doing trade management in accordance to AAP rules. And some of the trades we do scratch it, like for example, Edison Consolidated. This was one trade that if you factor in commissions, this is a small loss lah. Okay, because I only made like 3 cents. You factor in commission, then it's gone. So these are where this is where I'm just being fully transparent with you. And at the end of the day, the summary, 2023 year to date statistics, total trades 61, win trades 77% of the time, losing 22% of the time. Average win, average loss gives you a positive expectancy of 5.71%. And this is for the past 10 months. And if you go back the whole year, inclusive of October to November last year, total trade selection, total trades 81, win ratio 76%, lose percentage 23, expectancy still quite close lah. It's still positively expected 5.48%. So I believe not many people in this industry or in this business would do this kind of transparent tracking because it's quite stressful, because the thing can just turn haywire. But for me, it is what it is. All right, I got nothing to hide, because like you, I'm also skeptical. If I have a loss, I have a loss. Just like the past period, yes, I do have a few consecutive losses, but now the previous 2 weeks, the trades are all doing quite reasonably well. So the next question is, how much do you think you need to get started with this to execute the AAP strategy? I would say anything at least have about 5,000. 3,005 is like the minimum lah. At least have 5,000. I would say that would be a good amount to start, because we are dealing with stocks over here. We are not looking at forex. We are not looking at highly leveraged products. These are all stocks. So if you want to use leverage, then you can use CFD. If you don't want to use leverage, you can use the underlying shares. You can use IBKR fractional shares, whatever lah. That's up to you. But what I want to say is all this percentage is non-leverage. All this percentage is non-leverage. If I leverage it, then obviously it will look very nice lah. So I'm sharing it with you as raw as it is, so as to give you the non-embellished so-called track record law, in that sense lah, over a year lah, which I'm also quite surprised lah that this is for the past 1 year, right? I do have quite a reasonable, I wouldn't say like excellent, I would think that it's quite a reasonable above 75% win rate, and it's positive expected. I was taken by surprise by myself over here. Like, these 2 years, despite the market not doing so well, still can survive lah. So yeah, so this is what you will be getting yourself into as part of it. If you have access to this AAP strategy, you have access to my Facebook group, this is exactly what you will be a part of lah, and you can execute lah. So I'm not going to bore you with all this, students' testimonial, just executing with success using the AAP strategy. So these are all the students that have posted inside the Facebook group. So once you are in, you can go and see as well. Like for example, Keith say took partial profit. This is part of the trade management. 10% profit from 2nd June, not bad. Yeah, etc. So this is Arvin, and some other, yeah. So over here, right? The last thing I want to share with you is that you may be thinking, Jay, is there any more upsell in a course? How much is it going to cost me? Is it going to cost me a lot? This is where, right, I want to highlight a few things. This is a review by a student. He's a beginner lah. Okay, he is a beginner. He said it's a systematic, step-by-step program, well explained, easy to understand. It gives him clarity, confidence, and of course, easy to apply. And there is no upsell. Not I say one, my student say one. And the best thing is, most of the time, right, you just need to plan for your trade before market open. You need to plan and send the order before market open. You don't have to stay up overnight to, to launch the trade in and to do that. You don't have to. You still can have your normal lifestyle. I assume you're in Singapore, you're in Asia. You just have to do your trades before market open. All right. So key in the order before that. But if you can't even do that, then I can't help you lah. But if you can do that, maybe this is something that is able to help, to bring some consistency to you, like it did for the past 1 year for all my students and myself. So how much is this program going to cost you? Now, here is what you are going to get to give you this summary. Number one, you will have access to this e-program where you have 24/7 access. You have lifetime access. Don't care about all this what per year thing. You will be then added to the Facebook group, which you will receive the weekly trade list from the Facebook group itself. Then 4 times a year there will be market update webinar. Then trading plan technique, the learning resources, all these will be from the portal. So usual price enrollment is at 897 Singapore dollars. And in conjunction together with Online Traders Club Singapore, if you enroll today, you will be given a 40-ish% off lah. So it will be a one-time payment, no subscription, recurring, etc. Lifetime access, one-time payment of 497 Singapore dollars when you apply this promo code at the current link, which is AEP, okay, AEP eCourse, bit.ly/AEP eCourse, promo code OTCS, Online Traders Club Singapore, 1023, October 2023. Or alternatively, you can scan the QR code on screen and then still apply the promo code. You can do so on your mobile. And that's how you can get immediate access to the AEP program. All right. So that's what I have to share with you today with my framework. And then lastly, this trigger, which I hope that you will get access to as well. Okay. So Richard.
Yes, thank you very much, Jay. Awesome sharing, and I think the transparency you have shown is very rare in this industry, right? And that's one of the key reasons why we invited you to share with our community and also our database as well. Yeah. So I just want to have a few questions. So for any of you who are with us here tonight, if you have questions for Jay with regards to what he has shared, please type into the chat box now. You can locate the chat box on the bottom right. So type in your questions and I'll ask Jay on your behalf. Okay, so if you're using a mobile device, please scroll up or down to look for the chat box. If you have any questions for Jay, so please feel free to type it in right now. So while waiting for the questions to come in, Jay, I have some questions of my own. So now I see the whole presentation. So just wanted to check with you. This program is suitable for beginners or for experienced traders?
Okay, good question. Thank you, Richard. So this program I do cover from the basics as well. So if you are a beginner, which some of my students are, then beginner it will be suited. And for experienced traders, right, they will be immediately able to apply the framework of number one, how I find those evergreen stocks to trade. Number two, what is the exact trigger, and that can help them to gain the kind of consistency to avoid the false breakouts, and what the participants, regardless whether they are beginner or experienced, they will definitely have access to the Facebook group, which I think the highlight is the weekly stock list, which you can see the track record is there to speak for itself.
I see. So it's suitable for all
Both.
levels.
Yes.
Okay. So the weekly checklist is only for US stocks, right?
Yes, I focus only more. I would say exclusively to on the US stocks because I find that they are the most trending in that sense, and the most they're basically the leaders. So if they go up, the rest of the world, the other equity market tends to be in positive correlated to them as well. So might as well I just look at the
Yes.
Yes,
Okay, you're back.
I'm back. Sorry, it just went off again.
Yeah, no problem, no problem. Okay, good. So just now I was asking the question.
Mm,
You exclusively on the US market.
yes,
So for a person who, how much time commitment? Let's say the e-course is lifetime access, so they can
yes.
always revise anytime they forget something or they want to revisit some things is always there.
Mm.
And if you update the course, will they also receive it?
Yes, so it has been my practice lah to continue with the support for my students. Because this is really I'm not a very, how to say, those very commercialized community lah, where everything is about, upselling, membership, paying. So for me is, as long as there's updates to the market, or as long as there are updates to the strategy, I will also update within the portal itself. So, like for example, Richard, yourself, you were inside the one of the other e-programs that I offered previously. And lately, I also updated the some of the entry criteria as well as the indicators within, and all these are provided for you free of charge as well, and it's all updated within the portal.
Right, that's very
Mm,
nice. Okay, so it's truly pay one time and get lifetime access to the
yes,
course, and also get lifetime access to the Facebook group where you and your team post weekly candidates, right?
yes.
So so in terms of time commitment to execute, so if a person have a job and then they only want to do things in the shortest possible time,
Mm,
so what is the time commitment that they will need? They take the list that you have posted and then
ye-
they just follow the rules, right? If you trigger, they are in.
yes,
If didn't trigger, then the trade is like expired lah.
yes, in a
Right.
sense.
So and then when a trade is in, is using a pending order, right?
Yes, a buy stop order.
Okay,
Most of
buy
the time,
stop.
if you are going long, yes.
Okay. So after entry, then you will put in a TP and a stop loss, a target profit and a stop loss.
Yes, the bracket will be
Am I
there with a TP, and then most importantly with the stop loss lah. It will go
right?
in together with the order.
So in that sense, once the candidate list come out, then
Mm,
I'll just wait for the rules to be met.
yes,
Once it's met, I'll put in the buy stop order, and once it's entered, in fact, I can put it in as a one order
yes.
together with the TP and the SL, the stop loss, and it's set and forget, isn't it?
Yes, in that sense. That's why just now I say if they have time, they must have time to at least key in the order. And how long would that take? That probably will take about, I would say, before market open, probably 15 to 20 minutes. So if they cannot or don't want to even come up with this time, then that's not something that I will be able to help them with already.
Okay,
Yes.
understand. Okay, so now every week, how many counters are there? How many candidates are there that you share? Like 10 or just one or two or what?
For AEP, what we do is we will keep it to two of the best so-called selection. Because how I go through the list, right, is I usually have like when I look at my focus list of stocks, right, usually I have like a few dozen of them. So I'm literally spending the time to look at the charts one by one and finally deriving at, okay, I think these are the two that I am going to trigger. And that's how the list comes about. In fact, last time we don't even have a list. It's just that one of the early pioneer students, they were saying like, yeah, since you are going through all this process, right? Why not, just share the byproduct, as a shortcut to the rest of the students as well. I was like, okay lah, it's not going to cost me extra work. I'm doing it anyway for my own trading. Then okay lah, then I put in the list. Also, it's a very specially curated two stocks lah. After I filter out the rest from my watch list also.
Hmm,
So that also partly explain the consistency and the win percentage that we have lah for the past year, despite what the market is doing.
I see, I see. So you
Mm.
have further added value lah to filter out the list of the best candidates.
Yes, and I do spend about 1 hour plus every weekend to do that.
I see, I see. Okay, thank you. So let's say 1 to 2 a week, and then let's say one or two is triggered, and then
Mm.
each trade lasts about maybe 3 days to 2 weeks, right?
Yes.
So at any one point in time,
Mm.
from your memory, how many maximum open positions are there?
Based on what we have experienced for the past 1 year, right? There is at most we have about 5 open positions at one time. So the overlap is not like we won't have like 20, 30 trades all at one time. So it's about 5 or so. So like currently we have four that are open. So pretty much around there.
Okay, so it's a manageable number,
Yes.
single digit number in terms of overlapping. Okay,
Mm.
that's good because that will help to do some capital planning, right?
Yes.
How much is needed to trade this AEP portfolio, so to speak, right? So and then you just now you mentioned fractional shares. So of course, if a person is having a deeper pocket, they can just buy the shares outright. Don't need
Yes.
to use fractional shares.
Yes.
But for those who wants to allocate a smaller amount per position, or they want to have a more accurate allocation,
Mm.
right, to each position, then they can use fractional shares. So it doesn't matter whether they use fractional shares or they use the real full shares.
Yes. The position sizing, how to do the position sizing, how to calculate how much size to go in with, is also included as one of the chapters within the program. I believe that any setup is not completed if any program or any strategy is not completed if we do not know the entry, the target, the stop loss, and most importantly the quantity lah. Because you cannot just buy based on what we feel like ma. I think that's not a nice way or a consistent way to trade. But contrary, what we should do is have a formula to calculate what is the size that we should be entering with, and if those with bigger account will obviously be able to enter with round numbers. Those who want to initially just want to try out this strategy to see the effectiveness, then you can try out using a smaller account. That's where the fractional shares comes in.
I see. Understand. Okay, let me see what other questions I have.
Mm.
Okay, maybe you can drink water.
Yeah.
Okay.
Mm.
Let me see. Marcus is asking,
Yes.
if let's say there's a portfolio of 5K capital,
Okay.
how much average return would he have achieved? Is it 50% or 100%?
Out of what's the time frame that we have?
Of all the trades that you have taken?
Of all the trades,
Hmm.
every trade now with this, let me just go up to the,
I think a simple back of the envelope calculation, Marcus, if you don't mind,
yeah,
is to take the 5% per trade
the
and
expectancy.
82 trades. So that would be multiplied from there.
Yes, in that sense, yes.
Right? Because expectancy means if
Per
I take
trade.
each trade, every trade
Mm.
I expect this return, because
Yes.
based on the win rate and the average win, average loss.
Yes.
Yeah. So I hope that answers your question, Marcus.
Mm.
Okay.
Yeah. So that if you multiply it, it's a little bit off the charts lah. But yes, this is so far a good year.
Yeah. So this past year has been been through a very interesting environment, right? Just now you were showing the chart.
Yes.
Yeah. So last year to this October last year, when you first started tracking your AEP,
Mm.
wow, the moves is crazy, man.
Yeah. So it was a little bit choppy lah
Right.
in this period.
So despite this, and you can still capture the moves. That's
Mm.
pretty impressive.
Yeah. Thank you. Thank you.
Okay. Let me see. Okay. Adrian is asking,
Mm.
using AEP, how can I expect to grow from a capital of 100K? How much can I expect to grow using 100K capital? So,
How aggressive will he be on the size? Okay, so let's assume lah. He takes he sets out if 100K, let's say you go 10,000 per position lah. For example, an allocation of 10,000 per position, return of 5%. That's about 500 per trade. Then you obviously still have some spare capacity. I'm not suggesting you use the whole 100K. So how to expect the growth capital of 100K? I think let's still go back to this percentage. I think at the end of the day, if you if let's say without consideration of any other factors, just the numbers, pure numbers itself, we take 100K as a starting capital. Then every trade, if it returns you about 5%, I think you can do the math faster than I do it, right?
Okay, I do the math. Okay,
Yes.
so this is again, this is disclaimer. This is
Yes.
just purely mathematical calculation based on the statistic here. Actual past performance is not future results, right?
Yes.
So if you are in doubt, please consult a professional, get professional help. But taking the numbers here, let's say at any one point in time you won't have more than 5 positions, right?
Yes.
You don't want to allocate your entire account.
Yes.
So assuming that you're high risk, super high risk, and you put in 10K per trade. So at any one point in time, there'll be 10K in. So 10K, 5% means
500.
500, right? So 500, let's say last 1 year, this is a total summary, huh?
Yes, correct.
So 5%.
Total is 82.
82. So 500 times 82 is 41,000. So 41,000 is based on math, based on the formula. There'll be that kind of numbers we're looking at.
Yes.
So when, let's say there are at any one point in time, there is only 5 positions, up to 5 positions simultaneously on. So up to 50% of your capital of 100K will be utilized, so to speak. Right?
Yes, correct.
So then from there, based on this mathematical calculation, we arrive at 41K. So 100K will grow to 141K. But this is based on historical results. And again, I want to emphasize, this is past performance is not indicative of future performance. You do your own risk assessment and allocation, right? Always only trade with capital you can afford to lose 100%.
Yes.
Okay, so if you cannot afford to lose 100%, please adjust it down, right?
Yes.
Start small. Don't have to rush. Don't rush, right? You have a lifetime access to all the candidates that Jay and his team is providing in the
Facebook group. Yeah.
All right. So, Adrian, I hope that answers your question. Always start small. All right. Don't whack big. Don't whack big. Okay, Adrian, and anybody else listening and watching this video.
Yep.
Okay. Sean Jin is asking, can we use options instead of buying stocks?
Yes. So I have to highlight that within the program, I do not cover options because options is an instrument by itself. So what my focus within this program is on the stock itself. So you're asking the question, provided which I assume you already know how to deploy options. Like at least you know how do you go long using options, how to go short using options. On that assumption, can you use options to trade those stocks instead? The answer is yes, because at the end of the day, what we are doing here is to figure out where do we find food, how do we put the food on the plate. Then after that, right, how you want to consume this food, whether you want to use a spoon, whether you want to use a fork, use a chopstick, that is the instruments. So I will akin it to like maybe the underlying, the instrument, you want to use options, you want to use CFD, those are just like different utensils, different instruments. But at the end of the day, it's essential that I need to put the food on the plate first. I need to first have the food, and this is what the AEP focuses on, to get the food on the plate so that you are able to eat from it. With whatever instrument of your choice, obviously, yes, you will be able to vary the instruments. I use underlying stocks. I use CFDs. I also do use options to trigger some of them. But but you need to know that the focus over here is to get down to these stocks that I showcase over here.
I see. Okay, Sean Jin, I hope that answers your question.
Yeah.
All right. So let me see. Any other question? Okay, that's all the questions we have at the moment. So Jay, can you please show the QR code again? All right. So for those of you who are interested to take up this special offer at a special price from Jay, please scan this QR code or go to this URL. Make sure you enter the promo code OTCS1023 to get the special price. Okay. So Jay, this promo code is case sensitive or not case sensitive? Capital letter.
Case sensitive. So it's all small letters. All small.
Okay, all small. So please, if you make payment, make sure you see the amount is 497. If you see more, please make sure the promo code is entered on the page first.
Yes.
All right. So wonderful. So Jay, thank you so much for your sharing tonight. I think your transparency in terms of your performance of the candidates that you share in your Facebook group in the past 1 year has been very commendable. Right. Let's hope that the market continue to reward
Mm.
you and all of us, your students, with through the AEP program. All right. So and thank
Yes.
you for making this a very special prize
Yes. I hope so
available
too.
to our community and also our audience on YouTube. So
Mm.
thank you so much. Any last words for our attendees?
Thank you all so much for for attending tonight's webinar. Thank you, Richard and OTCS, for organizing. I know it's not easy to organize any events. So for the attendees, right, for the traders, if you are still facing inconsistency in your results over despite how long you have been trading in the market, maybe it's time to introspect to see if there is anything that can be changed internally instead of just losing hope or jumping from one thing to another. I'm not saying that you must sign up for the course, but I do believe that what I have here today is of a very valuable proposition for you, and the result speaks of I mean, I got nothing to hide. It is what it is. It's nothing better, it's nothing worse off. It is exactly what I have shown you. So if you think this is something that can help you, or something that you are keen on learning and embarking on, I more than welcome you to join the community and enroll using the current link and the QR code on screen over here. So I will see you within the community itself.
Right. Thank you, Jay. Thank you so much for your time and also for your generous sharing. And for the attendees, if you miss any part and want to revisit, please go to the Wealth and Joy YouTube channel. You can see the replay there immediately after this session if you want to revisit anything that Jay have shared. So just go to YouTube and search for Wealth and Joy, WEA. I think you know lah, Wealth and Joy. Otherwise, you wouldn't be here in the first place, right? So you can watch the replay there right after this session, and if you miss any earlier parts or you want to revisit anything. So with that, I thank you for your time, everyone, for coming here tonight, and I'll see you at the next event. Thanks, Jay. I'll catch up again.
Thank you. Thank you. Goodbye.